Ebola is not going to cause people to stop flying, at least in our opinion. But the interesting thing about it, Steph, is if they do, okay, American Airlines is still cheap. Why? Because if you look at the impact of a big event like 9/11 on what happened to the carriers, major destruction in demand, American Airlines, we believe, will still continue to make money, which is a far cry from the way the industry looked in 2004 or in 2001 when there were a number of carriers with very little discipline with respect to capacity. Today, they've done an exceptional job in managing capacity, meaning the number of aircraft that they fly, the number of available seats, and that helps them to have pricing that's more in line with their cost structure.
So is it a play on airlines in general? Why American, not Delta, not Southwest?
Well, American we found interesting because it's a company that exited bankruptcy less than a year ago, and we don't think that the market has begun to reflect the actual attractiveness of that company and its earnings power. So, for instance, it's my belief that American Airlines will generate in the next 2 years roughly $16 a share in earnings over the course of the next 2 years. If you look at the stock price today, which I think closed somewhere around $35 a share, at least that's where it was when I walked in here, you're getting almost 50% of your purchase price back in 2 years on an after-tax basis. And then looking at it on a pro forma basis from there forward, you're creating it for less than 4 times normalized fully taxed earnings, which I think is pretty cheap for a company like American.
Is fuel price a factor for you because it's going your direction?
It is, and thankfully American's unhedged. Now, most say, well, doesn't that put them at risk of a significant rise in the price of fuel? Interestingly, American Airlines has continually achieved, if not the lowest, then one of the very lowest average fuel costs per mile flown in the industry, and that's as a result of not being hedged. So it calls into question the actual cost of hedging. It may smooth your earnings, but ultimately at a higher level. So we don't fear lower oil prices. We actually think it could be an interesting tailwind for the stock, no pun intended.